Every year, tax laws, they continue to evolve. And some of these new laws can be really weird
and really complicated.
Which is why in this video, I'm gonna walk you through some of the highlights and things you should really look out for when you go to file your 2021 tax return. Hello, fellow YouTubers. My name is Mike, the CPA, and on this channel, I make videos that cover finances, investing, and taxes. The first item I would like to cover with you is unemployment compensation. During 2020, many people across the United States received unemployment compensation due to being let go from their job from the pandemic. At that time, the IRS allowed for 2020 these same individuals to exclude from their income up to $10,200 of their unemployment compensation. This essentially meant they could get unemployment money and not pay taxes on it to the extent of $10,200. If their modified adjusted gross income as a whole was under $150,000. For 2021, one thing you need to be aware of if you received unemployment compensation is that exclusion is no longer going to be available to you. Money you receive from unemployment
is likely all going to be subject to taxes depending upon your circumstances.
This next item, I think, is going to affect the most people by far of anything I discuss in this video, and it deals with the child tax credit. Normally, people would report their full child tax credit on their tax return, on this form, which I have up on screen right now. But for 2021, the government decided to do things a little differently. And by a little, I mean quite a bit differently. And they decided that they were gonna send out advanced payments. That instead of an individual getting the full credit on their tax return, they were instead gonna give about half of that credit in the form of advanced cash payments. And I think, if I recall correctly, they started in July of 2021. That's when people were able to log into that irs.gov portal, set up their information, and start receiving either paper check or direct deposit to their bank account. And I know from talking to various people that the IRS really screwed up on the amounts they issued people. And I think later on they tried to fix it. Regardless of what you received in cash, even if it was exactly half of the credit you should get or not, make sure you know exactly how much cash you received throughout the year for that advanced child tax credit. The reason being, as you can see on screen as we're looking at the form in this spot, which I have up on screen, it's really important that you report that proper amount. Otherwise, you're probably going to get notices or adjustments later on. You don't want to underreport your credit, and you don't want to overreport what you received in advance payments. You understand? Because that's going to lead to issues if you do. Where I think the child tax credit is going to catch a lot of taxpayers off guard this year is they've probably already forgotten that the credit they're going to be reporting now when they go to file their 2021 taxes is going to be a lot smaller, right? The reason it's smaller is why? Is because they've already gotten supposedly about half of that money up front during 2021 in the form of cash. And when they report that smaller credit on their tax return on this form, if they're normally used to getting a refund, then they're probably going to get a much smaller refund. Or even worse, they might even end up owing the IRS. Now, as far as 2022 goes, what I've seen, what I've heard, is there's no plan to further continue those advance payments. I really appreciate you guys being here and watching this video. If you're finding this helpful, if you could just do me a quick favor and drop a like on this video, or even consider sharing this with others, it would mean a lot to me and it really help out the channel. Thank you so much. The next item of business really does deal with businesses, and that is net operating losses. Up until tax year 2020, if a business had an overall net operating loss, they could use that loss and carry it back up to 5 previous tax years and use it against a year when they had a lot of tax and had a lot of taxable income. they could apply that loss to that previous year and recuperate some of those taxes they paid years ago and get a cash influx into their business. One particular business owner I helped last year, I got them back over $1 million using net operating losses. 2019 and 2020 was just not a good year for them. But because of the tax code, we're able to take it back and I was able to get that taxpayer a lot of money back. Starting in 2021 though, what you need to be aware of is if you have a net operating loss, you can't carry it back anymore. Any loss generated from 2021 and on, it has to be carried forward, and that loss is limited to 80%. Next on the list is coronavirus distributions. The thing to remember for 2021, I want you to just be thinking of this, is most people were going to be paying this tax back over 3 years, assuming you did not repay those funds. Assuming you did not repay anything back into your retirement accounts, then whatever amount you took out, in theory, you're probably going to be paying back a third. So if you took out, let's say $1,000, then each year for 2020, 2021, and 2022, you're going to be reporting that $333 each year. So don't forget to do that. And from the form here, you can see where or which form I'm referring to. Don't miss that because it can lead to IRS notices and a bunch of penalties that you're just not going to want to deal with. Let's hit on estimate payments real quick. In particular, I want to talk to you about the first quarter estimate payment. A lot of people, I think, got tripped up last year. The IRS, they moved the initial filing deadline for people's tax returns. If you remember this, do you guys remember this? From April 15th, and they said, okay, well, we'll let you have until May 17th for that first initial deadline. So a lot of people, what they did is they did not make their first quarter estimate payment timely because they waited until May 17th, thinking it was okay. But just remember, if you pay estimates, your first quarter estimate payment is April 15th. Regardless, keep that, they're two separate dates. The estimate payment date and the filing date of your tax return are two separate things. If you pay estimates late, you're probably going to be subject to penalties, and that are going to pop up when you go to file your 2021 tax return this coming year. If you're somebody who likes to make a large extension payment so that you're overpaid, and you like to apply that overpayment to your first quarter estimate, that's fine. But if you're going to do it that way, make sure you make that payment no later than April 15th if you want to minimize any underpayment penalties or late payment penalties the best as possible. That's what I would advise. Let's talk about the recovery rebate credit once more, because you're probably going to see it again on your 2021 tax form. The recovery rebate credit, if you remember, it's intertwined with the economic impact payments. What we all know them to be is the stimulus payments. Most people received 3 stimulus payments, so all that ties back with this whole recovery rebate credit. If for whatever reason you should have received those stimulus payments, but you didn't, you never got the cash, you never got the check or whatever it may be, also failed to report what that credit should have been on your tax return for 2020, I'm talking about 2020 right now, and this would apply to 2021 as well. If you failed to report that recovery rebate credit amount, what you're going to need to do is the IRS is not going to automatically adjust that for you. What you're going to have to do is you're going to have to amend your 2020 tax return in order to get that money. Piggybacking on stimulus payments and economic impact payments, if you determine that your check was lost or stolen from you and you never received the stimulus check that you should have gotten, and if this happens to you, I'm so sorry if that's your case. So how do you get that money? The only way to get it, if this is your situation, is to contact the IRS, request a payment trace on those checks or that money. They need to see where the money went, who signed it, who deposited it, so they can issue you a new check and the money that you should have gotten. So that's what you need to do if your EIP payments were, stolen or you lost them. The last item I would like you to consider and think about for 2021, and I'm not going to go into a bunch of detail here because it's just far too complex, is if you're a business owner and you got a Paycheck protection loan, is look back at 2020 taxes, see how it was treated there. Has that loan already been forgiven? Was it forgiven in 2020? All those things you need to work through to determine how to properly report that transaction on your 2020 run return. And same goes with grants. Look into the grants, look into the taxability of any of these grants, and make sure you're reporting everything properly before that return gets filed and goes out the door. All right, guys, I think I'm gonna wrap it up here. But if you want to learn more about 2021 taxes, make sure that you check out this video right here, and that's going to give you the rundown and a free spreadsheet of all the different tax numbers that you should be aware of for 2021. Also, I'm working on the 2022 tax update video. It's probably going to be my very next video, so make sure you don't miss it. Make sure you're subscribed to this channel, and I'll have a lot of new content coming out this year. Thank you so much for your time, everybody. It's been great seeing you and hanging out with you. Peace. See you soon.